Welcome to the Capital News. I am your host, Alex Karitis. Today is Saturday, September 18th, 2021. Thank you so much for joining me. This is our second podcast of the day, trying to get caught up on missing last week. Title of this podcast is American Dream is Too Expensive, and the main focus is going to be on housing because that's always the American dream. That's how it's portrayed. Buying a house, white picket fence, starting a family, all that good stuff. And that is good stuff. But it is becoming more and more out of reach for more and more Americans by the day, by the hour, by the minute. And this is because we have an out of control federal government and Federal Reserve that are enacting policies, that are implementing policies that are contributing and are the direct cause for pushing the American dream further and further out of the reach, beyond the reach of so many Americans. And they know it. And they know it. And the reason why we know it is because when it comes to housing, Jay Powell, the chairman of the Federal Reserve, was asked this question a few months ago during a press conference following their Federal Open Market Committee meeting. A journalist finally had the spine, finally had the balls to ask a serious question, which was such a sigh of relief to us here at the Capital News. And I remember this because we talked about it at great length because I was just in shock and awe. Finally, a tough question. Mr. Powell, the Federal Reserve remains committed to quantitative easing, $120 billion per month at minimum. That breakdown at minimum is $80 billion in purchases of Uncle Sam's debt and $40 billion per month at minimum of mortgage-backed securities. With respect to the mortgage-backed securities, sir, is this not contributing to ever higher and increasing housing prices? And isn't this pricing out many young Americans and even established Americans who are in their career and maybe trying to move up to another house, into a bigger home? Well, yes, Chairman Powell says. Yes, that is of concern. And yes, this could have a big impact on a generation of Americans. He said it like it was nothing. A generation of Americans. And of course, that generation he's talking about is my generation, the millennial generation, which is one of the biggest in this country's history. Oh, yes, just putting that out of the reach of a generation of being able to afford a home. Oh, yes. And are they going to stop with these mortgage-backed securities? Obviously not. And I'm going to talk about that here momentarily. We're just going to look at that section of their balance sheet to see how that has been trending. And remember, $40 billion a month at minimum is what they have remained committed to. And we're going to see how they've been blowing that number out of the water. And again, this is all part of the Great Reset, not some tinfoil hat conspiracy theory. This is stated out in the open. You just have to pay attention. You just have to read some of their documents. They put it out in the press. They're open about it when they asked about it, or they just give speeches talking about it. You will own nothing and you will like it. And of course, these policies enacted by the Federal Reserve, well, hey, all this money it's going to BlackRock, it's going to pension funds, etc., because they are the holders of the mortgage-backed securities. BlackRock, pension funds, major investors, hedge funds, what have you, okay? Mortgage-backed securities aren't for the little guy, and that's okay. I don't have an argument with this. But that's what's going on here. The Fed prints the money. They purchase the mortgage-backed securities from those who are holding them. Those are the pension funds, BlackRock, big investment firms, etc. Now those firms have the cash. They used to hold the mortgage-backed securities, a piece of paper. Now they hold Federal Reserve notes. We call them dollars. Now they're taking those dollars and they're going out into the real estate market and they're buying homes for cash. The average Joe and Jane cannot compete with all cash offers. The average Joe and Jane can't even come up with a 20% down payment. Okay? They can't compete with all cash offers. That's why we continue to have prices going up and up and up, despite what we might see on a week-by-week or monthly noise in the data as to whether or not mortgage applications are increasing or decreasing. Because typically, before you had this slush fund of cash sloshing around all over the place, that was usually what you looked at. You said, oh, well, what are mortgage applications? Is there good demand? What's going on here? Because that's going to be indicative as to maybe the strength of the residential real estate market. And maybe by that, if you have a lot of strength, then of course that demand is going to put pressure on prices and put them higher. Okay, we understand that. But now we might see conflicting data. We might see weakness in mortgage applications, but we still see residential real estate prices moving higher. And the reason that is because you don't need a mortgage if you're purchasing in cash. Well, you have to ask the question, where's all that cash coming from? Well, we know the answer to that, and it is not stopping. And I have been stating this throughout this year. All of these trends, all of these big increases, year-over-year percentage increases on the Case Shiller Index, which is what we're going to discuss here at length here momentarily. We're going to look at the national index, we're going to look at the 20-city composite, and we're going to look at the 10-city composite when it comes to the S&P-Case Shiller Index. But this is what you get when the Federal Reserve continues to purchase mortgage-backed securities at this type of rate. And again, I said, keep $40 billion in the back of your mind. Well, right now, the Fed's balance sheet, what they're holding mortgage-backed securities, is at $2.5 trillion. This is another all-time high. Well, week over week, this was an increase of $76 billion. This is why I said remember $40 billion. That's supposed to be $40 billion a month. They just purchased $76 billion in 1 week. Okay, you get it? They do not care about you. They are perfectly fine with pricing out an entire generation of Americans from being able to afford a home. Because there's a lot of people out there who say, oh, well, interest rates are so low. Isn't that fantastic? Interest rates got to be low so people can afford this, that, and the other. No. There is no free lunch, ladies and gentlemen. If you're going to have low interest rates, that's going to put upward pressure on prices. Period. End of story. Now, if you're first out of the gate and you have some savings and you can get the house that you want quickly, well, good for you. But for everybody else out there who's looking for a home, and even though you have low interest rates, but you got all this cash flooding the system and a lot of it's going into real estate, too bad for you. You're priced out. You're going to have to pay rent. You're going to have to pay Vanguard. You're going to have to pay BlackRock. You're going to have to pay some hedge fund or some pension fund rent every single month. And they'll charge what they want because they can. And rents are going up as well. And rents are going to continue going up as well because landlords got screwed during this period because of our federal government and the policies that they enacted with all of these rent moratoriums, and you don't have to pay, and they can't be evicted, and this, that, or the other. Well, fortunately, we still have a branch of government, our justice system, our judicial system, at the highest level, the Supreme Court, striking this down is unconstitutional, that you cannot continue with these rent moratoriums. You can't do it. There's something called property rights in this country, thank God. Enough's enough. So the landlords got screwed over. And those that are still holding on, or those who are getting into the game, are saying, well, I mean, look, this is another risk that I have to be prepared for now. I have to be prepared for the federal government to implement something, whether it's constitutional or not, that is going to screw me over. It's going to say to my tenants, you don't have to pay me rent and I can't kick you out. So if you are going to pay me rent during a period where we're not in a pandemic, you're going to pay me more. Because if we are in a pandemic, or if we're in some other type of situation where the federal government thinks that they're doing everybody a favor, and they say you don't have to pay rent for this month or that month or what have you, that landlord is going to want a cushion. They're going to want a little extra buffer in their own bank accounts to weather the storm. Because you have to remember, and I try to stress this anytime I talk about the real estate market and these rentals, that a lot of these rentals are owned by middle-class Americans. They purchased another property or a couple properties, and they're just trying to make some extra cash flow. They're trying to build their nest egg, their retirement. There's nothing wrong with that. They're trying to achieve the American dream for themselves, whatever that is, however they want to define it. But the government screwed them over. So now you don't have to be paid. You can't kick them out, and you can't do anything about it. So now these landlords are doing a very economic, rational thing, and they are raising their prices because they need the cushion. Plus, of course, just depending on where you are, there might just be extra demand for rental units because people can't afford to buy the homes. They cannot afford to buy the home, so they have to go rent somewhere. And so the rents go up as well because the demand for rental properties goes up. The supply just isn't there. And of course, we talked about the supply and all of those construction issues over this spring and summer with lumber prices and other construction materials going through the roof. But there's no inflation, ladies and gentlemen. If you had to pay higher prices for lumber, if you had to pay higher prices for cement, for asphalt, for nails and screws and drywall and any other type of construction material, hey, guess what? You know what happens? You don't have to pay those higher prices. You already paid them. Now somebody is just going to miraculously give you a coupon or a rebate. It was just transitory. Didn't you understand that? You don't have to pay that higher price. We're going to give some of it back to you. Now, wouldn't that be nice if that's how it worked? But it doesn't work like that. So all of these pundits, all of these central bankers who are using the term, inflation's only going to be transitory, they can stick it up where you know where. Okay? That's what they can do with it. And they're starting to understand, as they knew from the get-go, that it wasn't going to be transitory. This was just their PR campaign. This was just their narrative that they thought that they had to push out there just to keep everybody calm. Yes, there's going to be some base effects. Things were so bad last year. Numbers are going to look big in this case, and sometimes that's a negative thing, and sometimes it might look like a good thing. But this is just transitory. It's not really anything that's going to be long-lasting. Of course it is. It's going to be with us for quite a while. It's very easy to see this, but nobody wants to connect the dots and nobody wants to be honest. And of course, as I stated on the previous podcast, the Federal Reserve is conducting their own internal ethics review. Again, this is akin to the fox running the hen house and investigating the hen house. Where did all the hens go? But that's what's going on here. Because members of the Federal Reserve are personally benefiting financially from their own policies. Wow, who could have thunk that one up? I can't believe it. What a shocker. But they got caught. And what are they going to do? Because some of these guys made millions of dollars. What are they going to do with all that money? Because now, obviously, it's a conflict of interest. It wasn't before they got caught, but now they got caught. It's a conflict of interest. It's an ethics violation, or perhaps an ethics violation. What are they going to do with those millions? They're going to give it back to the Fed? They're going to give it back to the government? They're going to give it to some charity? Is Jay Powell ever going to go to some of those homeless cities that, that's what they are. They're homeless cities. Is he ever going to go to some of these homeless cities and talk to these people? Maybe he can give them the millions. Since it was violation. Since it's a conflict of interest. And of course, you have some idiots on Capitol Hill, like Pocahontas, Senator Elizabeth Warren, saying, oh, yes, that's a violation. They shouldn't do that. It's a conflict of interest. I didn't hear her open up her stupid mouth and saying it's a violation or conflict of interest when senators purchase stock on insider information, or congressmen or women. Oh, no, I guess they're exempt. But you just got to point the finger at the Federal Reserve. Like I said in the other podcast, science, the party of science. Hey, there's exclusions, there's exemptions. Science stops at certain entities. It stops with migrants rushing into this country. They don't need to be tested for COVID-19. It stops at the post office. If they don't want to have vaccinations, they can't be mandated. It stops at the post office. In Congress, science stops at Congress and their staffers. If they don't want to be vaccinated, you can't mandate them either. But everybody else, your kids, anybody else they want to mandate, they got to do it. Do you not understand what's going on here? I just want to continue to stress this point because it's very, very important. I'm not on this podcast 24/7 like MSNBC and CNN and Fox Business. I am not here for divide and conquer. I'm here for you to think for yourself, to think rationally, logically, to connect the dots, and to understand what's going on with the men and women behind the curtain. Don't fight amongst yourselves with your friends, your family, your communities, other people down the street. Focus on who's pulling the strings. Focus on who's trying to get us to fight amongst ourselves. That's the culprit. Okay? So, back to the Fed's balance sheet with mortgage-backed securities, $2.5 trillion, an all-time high, a week-over-week increase of $76 billion, even though they say they're just going to do $40 billion a month. Yes, okay. And they even admit that this is pricing Americans out of purchasing a home. The American dream is too expensive. Onward to the S&P-Case Shiller U.S. National Home Price Index. Well, right on cue, month after month, it continues to hit a new all-time high. Okay? Latest data that came out recently is for the month of June of this year. We have the index sitting at 260.866. Now, obviously, that number to you might not mean anything if you're not looking at a graph as I am. I will put this into context momentarily. The year-over-year increase is also at an all-time high at 18.61%. So, getting to the actual index number, okay, again, we are at 260, let's just round it up, 261, all right? Where were we prior to the great financial crisis when real estate was just booming? The index then, in 2006, June of 2006, 15 years ago, was at 184.5. So that is quite the increase in a relatively short period of time. And unfortunately, this is not driven due to any type of great economic prosperity. This is all due to funny money being printed over the last decade. Because what can actually happen over time if you actually had a truly productive economy is prices could actually come down. Prices could plateau. You wouldn't have to see these types of massive increases, but this is what you see when you have these types of imbalances, when you have this type of economic planning at a centralized level. It's ridiculous. But this is completely predictable when you run these types of policies, which is why I'm allowed to sit here day after day, week after week, month after month, make the predictions and be pretty damn accurate. Because I'm not shooting from the hip here. There is historical context for this. There is common sense to this. There is economics behind what I am saying. So when I stated throughout this spring and summer that we're going to continue to see these indexes move higher and higher, well, that's exactly what we continue to witness. And it's because the Federal Reserve continues to put the pedal to the metal on purchasing mortgage-backed securities. It's because that swap with them purchasing the mortgage-backed securities and giving those big firms the cash, and those big firms going out into the market and purchasing real estate in all cash. That's why. This is not that difficult to understand or to connect these dots. You just have to pay attention, take a deep breath, step back, and say, what's going on here? That is what is going on here. All right, so that's just the index level. We're at 281 now. It was at 184.5 at the height of the subprime crisis over a decade ago. Now, the percentage year-over-year increase again for June is at 18.6% currently, 18.6%. Where were we prior to the great financial crisis? 14.5%, and that was all the way back in September of 2005. So that's even further back. But we are just blowing past that all-time high. And we are in the midst, and here's the big difference here. We are in the midst of the Greatest Depression. Back then, we were not in the midst of the Greatest Depression. We were in the lead up to the Great Recession, into the Great Financial Crisis, but we were not in a recession at that point. We had terrible policies which were leading up to the Great Financial Crisis, don't get me wrong, but we were not in this type of economic malaise that we are now. This is an economic crisis, is what we are in now. That's why they're doing these policies. That's why they are purchasing $76 billion in a week of mortgage-backed securities. That's why the Fed's balance sheet has expanded by over $4 trillion in a year and a half. This is why Uncle Sam is as broke as a joke, because they don't know what to do. They just keep spending and borrowing, spending and borrowing. That's why we are very close to having $30 trillion in national debt in this country. This is what happens when you're in the final chapters of a country, of an empire. Everything speeds up. They lose control. There's no accountability. It's every man and woman for themselves. That's why all of these conflicts of interest, nobody gives a damn. Just keep doing it, because everybody, the rats are abandoning ship, but they're getting the biggest chunk of cheese they can before they jump into the ocean. Do you not understand what's going on here? Huge increases. Pricing Americans out of housing. Now let's look at the 20-city composite. Same story, same song and dance. June of 2021, this index again for the 20-city composite is at an all-time high, 266.5. To provide context again, going back before the great financial crisis, we hit an all-time high then in April of 2006, and that number was about 207 on the 20-city composite. So 207 back then, the peak before the financial crisis, to 266.5 today. And the slope of the line is just as steep, which is something that you have to pay attention to. And when you look at the year-over-year increase, June 2021, 19.1%. 19.1%. Where were we? All-time high prior to the great financial crisis was back in, let's see here, because it's pretty close month to month, August of 2004. So going back all the way to August 2004, 17.1%. All right, and I'm going to give you the breakdown of some of these bigger cities too here momentarily. And that'll be for the rents. So, okay, because you can't afford the house. So let's see if you can afford these rental increases. Now, going to the 10-city composite. Now, on the index, no surprise, June 2021, we have an all-time high, 279.5, the all-time high prior to the great financial crisis, March of 2006, or excuse me, April of 2006, 227. So quite the increase there. And again, looking at the slope of the line, it's very steep, very indicative of this type of massive growth in prices that we're seeing. Unfortunately, it's not tied to economic growth. It's tied to money printing and fiscal policy malfeasance. Okay? Year-over-year increase on the 10-city composite, June 2021, is at 18.5%. This, however, for the 10-city composite is not an all-time high, at least not yet. I would not be surprised by the end of the year if we do hit an all-time high on the 10-city composite, if we continue to see these types of mortgage-backed security increases, as well as these all-cash offers in all of these cities. So the all-time high still remains the all-time high, and that was prior to the great financial crisis. That was in July of 2004, and that was at 20.5%. 20.5%. And again, right now we're at 18.5%. So we are not that far away from overtaking that all-time high. And it could definitely take place by the end of this year if current trends continue. And the slope of this line is just obviously through the roof as well, year-over-year basis. Now, you want to talk about rents? Let's talk about some rents. Okay, let's look here. This is out of Bloomberg. Unabated surge is the title of the graph. Unabated surge. Annual apartment rents were up in all the top 30 U.S. metro areas. I'll repeat. Annual apartment rents were up in all the top 30 U.S. metro areas. Well, surprise, surprise. We just talked about it in a different format that was housing. Now we're looking at rents. No surprise. This is for August. Okay, so this is even a little bit more updated because we were just looking at June. All right. Phoenix takes the cake. August year-over-year increase, 22%. Tampa, 20.2%. Las Vegas at 19.2%. Miami, 17.5%. Raleigh, North Carolina at 17%. Atlanta at 16.7%. Charlotte at 15.4%. Austin, Texas at 14.9%. Sacramento, 13.9%. Nashville, 13% even. Orlando, 12.7%. Denver, 11.9%. Portland, 11.3%. Dallas, 10.6%. Baltimore, 10.6%. Orange County, 10.4%, and everything else after that is 9.5% or lower, all the way down to 1.4%. San Francisco, surprisingly, but they're out of control to begin with. And that's one of the biggest homeless cities there is, too, in the country. But, of course, that's Nancy's district. Speaker of the House, Nancy Pelosi, that's her district. She can chum it up with her buddies, 10, 20, 30,000 plate dinners. Meanwhile, people in her city are, unfortunately using the streets as bathrooms. But that's just the America we live in. That's the tale of two cities. The American dream is out of reach for millions and millions of Americans, ladies and gentlemen. And unfortunately, it's not getting any better anytime soon. Because when all of this stuff comes down, that is going to be a destructive force too. Because when all of these things start to come down, housing, prices, this, that, and the other, stock prices if the market ever should come down to a realistic valuation. That's going to cause its own havoc. That's going to cause its own problems. That's going to cause a lot of uncertainty. You're going to have a lot of psychological impact from this. Businesses might tighten up. Employers might say, well, we're not going to hire. Might start laying off. Might start doing this, that. Might start moving more towards automation. Don't need as many people. They don't want to work anyway. Uncle Sam's giving them all the money. What do we need? Okay? We are on the wrong path here. Now, we're doing it to ourselves. People don't want to pay attention. They don't want to be responsible. They don't want to hold their politicians to account because they really think there's a difference between the Democratic Party and the Republican Party. There isn't. There isn't when you break it down. The Federal Reserve is unaccountable. They're reviewing themselves ethically. I mean, my God, what a joke. But that's what's going on here. Those are the rents in some of the largest cities across the country. Just millions of people in aggregate, tens of millions of people in aggregate. But there's no inflation. 22%, 20%, 10%. No, there's no inflation. And those were some of the other figures that came out this week too, was inflation. What was it, 5.3%? Markets were anticipating 5.4%, and some of these idiotic financial mainstream media outlets say, oh, well, inflation came in cooler than expected. Are you kidding me? Because it came in at 5.3 as opposed to 5.4, inflation came in cooler than expected? That's what they're telling us? This is the media? You want to read these people? You want to read these articles? You want to take these people seriously? If we had a reading of 5.3% in 2019, I mean, my God, the markets would have crashed. But now it's like, well, it might just be transitory. We're going to believe these idiots. Because that's what they have to do. These crack addicts, they have to believe their crack dealer. The idiots on Wall Street, the crackheads, have to believe their crack dealer, the Federal Reserve. They have to believe them. They want to believe them because they need a bigger dose. They don't want to upset their crackhead dealer. They don't want to they need the drug dealer. They don't want to upset them. We'll believe you. Whatever you say, we'll do it. Because we just keep giving us this monetary methadone. Don't rock the boat. We need it. And with their fix being satiated, unfortunately, for millions and millions of Americans out there, the American dream is becoming too expensive. You look at some other recent surveys that came out this week, everything's unaffordable. Whether that's durable goods, whether that's vehicles, whether that's housing. I mean, you have these survey results with levels that we have not seen, and this is a bad thing, we have not seen numbers this bad since the early 80s. That's how bad these things are. You can't afford it. A new car, a used car, a new home, an existing home, durable goods. But hey, keep voting for these people. Keep thinking there's a difference between the red and blue party and keep getting screwed. And now you got to wait until to see what they do with the debt ceiling increase, right? Because we're not going to be able to pay our bills unless they increase the debt ceiling. So hey, we got to keep spending more. We've spent several $1 trillion and we still can't keep up. What a surprise. What a shock. What a disgrace. And as I reminded the audience in just the last episode, I did 614 also today. Yesterday, September 17th is Constitution Day. It would behoove us to reread it, to study it, to analyze it, and to restore it. Because if we can do that, we can get on the right path, and our best days can be ahead of us. But if we continue on this path of making the American dream too expensive, then we're going to crash. We're going to hit rock bottom. But the question is, at that point, when we do hit rock bottom, do we stay there for a long time? Or do we bounce back? Do we understand, okay, we made one too many mistakes because we deviated too far from our Constitution, from free market capitalistic policies? Or will we continue to say, well, no, we're going to blame those things. We're going to blame the Constitution. We're going to blame our justice system. We're going to blame free market capitalism. That's what ails us. That's what's the problem. We have to adopt fascist, socialistic, communistic policies. That's what this is coming down to. This is the fork in the road that not only the United States, but humanity is facing right now. Brightest days could be ahead of us, or the darkest. Unfortunately, the path that we are currently on is taking us to the darkest. But if we learn from it, which we definitely can, the brightest and best days can be ahead of us. I don't want this audience to think that I am a Debbie Downer, that it's all negative. I am just a realist. I'm an optimist, but I am also a realist. These are the numbers. This is what's going on out there, and I'm not going to lie to you. Period. End of story. So there you have it. American dream is too expensive. If you live somewhere in a major city, I don't care, in this country, some other country, and prices are through the roof, you got, even if it's an outlier, just to discuss the ridiculousness of what's going on, send me an email, leave me a comment. I will gladly share it with the audience. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Koritis. Godspeed.